In today's interest rate markets, let's take a look at the 10-year note futures as they're moving higher today. 10-year note futures trading higher for a third consecutive session, as well as now trading higher 6 out of the last 7 trading sessions to maintain this upward momentum. Currently priced at 111.20, the highest level for a closing level going back to the early part of February, so basically a 1-month high there. And the range today, 111.11 on the bottom end, 111.27 on the top end. So we're in the higher section of the range today as the markets continue to maintain some upward price action. And looking at the driving factors today, I think there's a couple of things here influencing the markets. Number one, U.S. data this morning. Productivity release was showing productivity ticked higher than what was expected. Couple that with the wage component ticking lower than what was expected. Both viewed as positives as far as the Fed potentially viewing that as something that they could initiate or act on moving forward. Couple that with the weekly jobless claims in line with expectations, holding at the top end of the recent range, so didn't see a significant downtick there, and so pretty much unchanged week over week, and that was, I think, also viewed as a positive. Also, Fed speak today. Now, we did have the chairman on Capitol Hill for a second session, and certainly most of that text and most of that information flowed out yesterday, but it continued to influence the markets today as he was testifying in front of the House and or the Senate over the last couple of days, as well as Fed speak. We did have several Fed speakers today indicating that they do expect that rates will begin to move lower later this year, but the timing of that is yet to be determined. Now, looking at the yields, we're looking at a 10-year yield that is down a half a basis point today to 409 basis points. And the yield curve shifting slightly lower, pretty much across the curve from the 1-year all the way out to, let's say, the 10-year. Really, the 20s and 30s sold off slightly today, so those yields were just a touch higher, where you look at the middle to the front end of the curve. A little buying pressure, moving yields down about a half a basis point across the curve. And tomorrow, we do have the unemployment report for the month of February. And so that market, that will be a market mover as far as the expectations, how the Fed will interpret that. So again, the market does appear as it's moving into this big announcement tomorrow. We're looking at yields at the lowest level in a month and prices on the 10-year futures moving up to a 1-month high.